Hi, everybody. This is Alan Elman, the Blue Collar Investor. I've created this video to show you a recent defensive 4-day cash secured put trade I initiated from our premium member stock report. I used as an underlying security NetEase Inc., which is listed on the Nasdaq exchange under the ticker symbol NTES. Let me first show you why this was one of the securities that I selected for my option portfolios this week. So this is a little screenshot now of our premium member stock report, which we provide to our members each week. I highlighted for you in the yellow row the particular information I had available at that time. So here we go. NetEase was listed from our source other. That means it came from our BCI resource where we've identified over the past 18 years securities that would be appropriate for trading options. Now, NetEase is located in the software industry, which is currently ranked A, and you see A/A. That means it was also in our report last week when the software industry was also ranked A. Now, if you take a look at the mean analyst rating, you see 1.41. That's excellent because it's on a range of 1 to 5, with 1 being the best. So that's an outstanding mean analyst rating. The only blemish on our report, and it's a minor one, but nonetheless a slight red flag, and I wanted to point that out. You see the down arrow with on-balance volume. That means recently more cash was flowing into this stock on down days than up days. So that's a minor red flag, but everything else was so bullish that I decided to still select this as one of the securities in my multiple option portfolios. Now, moving to the right, you see that the stock does have a dividend yield of 2.2% and an ex-date of 5/30. Now, that doesn't affect us when we're doing put trades. Let's now look at the at-the-money implied volatility, and that's 33.8%. Well, just to give you a frame of reference, that's about double that of the S&P 500. I would classify it as robust, not egregious, not too high, but good enough where we can generate pretty decent option premium and still create trades that are defensive in nature. The option liquidity, yes, there is adequate option liquidity, which makes for more favorable trades when we buy and sell options. So these are the reasons why, and you see here also weeklies are available. Of course, that's what I'm using now, a weekly expiring on May 30th. Now, so that's the reason why this was one of the securities I selected. Now, I want to show you a 3-month price chart of NetEase compared to the S&P 500. And you could see the orange line on the top is the 3-month price performance of this stock compared to the blue line underneath it, which is the S&P 500. So you can see for the last 3 months, this has been an outperformer. And once again, that's just one of the reasons why I selected this as one of my portfolio securities for this week. And now our initial trade calculations using our BCI trade management calculator spreadsheet. So in the top row, we enter the trade. At the time when I actually executed the 2 contracts, NetEase was trading at 123.07. I used the out of the money 120 put, which generated 78 cents per share, $78 per contract, and I did 2 contracts. Now the spreadsheet will then calculate the following. It's a 4-day trade if taken from contract entrance through contract expiration, Tuesday through Friday. And the time value was 78 cents. If you look in the brown cells, that calculates out to 0.65%, and based on a 4-day trade, annualizes out to 59.7%. The broken red arrow shows you break-even price point from the trade initiation price of 123.07 down to the break-even of 119.22. Now, if NetEase moves from 123.07 to any price below the 120 out of the money put strike, and no exit strategy execution is taken, well, then shares will be put to us at that break-even price point of 119.22, which will represent a 4-day discount of 3.13% from the price when the trade was initiated. So that's the initial trade calculations. Now I'm creating this video 10:30 in the morning Eastern time on Thursday, the day before contract expiration. So this is May 29th, 10:30 a.m. Eastern time. Okay, this screenshot shows you my broker confirmation that the two contracts of the 120 out of the money puts were actually sold at filled at 78 cents, right? So $154, $156 rather, was generated into my cash account once that trade was executed. Okay, so where are we when we entered the trade? Well, the initial return was $158, less some very, very small trading commissions, usually between 50 cents and 65 cents a contract. Hardly worth even calculating. The cost basis, or the amount of cash required to secure the two contracts, was $23,844. So as I said, our unexercised return was 0.65%, 59.7% annualized. Okay, let me update you now. 10:30 in the morning. Today is Thursday, May 29th, Eastern Time, 10:30. NetEase was trading at 124.88. Went up. Okay, what was going on in the market? Well, first off, on Wednesday, there was a reported court ruling making the recent tariffs, proposed tariffs by our government illegal. And so that was definitely embraced by the market. In addition to that, on the favorable side, NVIDIA on Wednesday evening reported very strong earnings. So those were both pluses. Now, on the minus side, economic news came out on Thursday with disappointing jobless claims, more than expected, a shrinking GDP, even though it was a little better than expected, and disappointing pending home sales reports. So all these combined, as of 10:30 in the morning on May 29th, the market was up slightly. Okay, but NetEase was up, decently from when I entered the trade. Matter of fact, $1.81 above the price at trade execution. Even better, it was up $4.88 above that out of the money 120 put strike that I used. And even better than that, it was up $5.66 above the break-even price point, which, as I mentioned before, was 119.22. Thus far, there's been no need for exit strategy intervention. Everything has been going quite well with this 4-day trade. So we could say that significant returns can be generated even with 4-day defensive cash secured put trades. Part of that has to do with the fact that this was an elite performer and it had a fairly robust implied volatility. So these trades can be crafted to align with all market conditions. If we're more bullish on the market, we would have used a put strike closer to the money, or maybe even an out of the money covered call. So we could craft these trades to what's going on right now today, along with our personal risk tolerance. So here we are Thursday morning with a day and a half to go to contract expiration. And I would say that we are well positioned for a successful outcome. Ladies and gentlemen, that completes this sample trade video with NetEase. I hope you enjoyed it. I hope you benefited from it. And as always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.